it goes up real good. So I like you just gotta try stuff. But I think definitely like try the simplest thing first. Don't slap on a bunch of shit because then you're gonna have to work out what's like
Yeah.
if you watch the Darwin's videos, he's like when you're building a strategy, you don't want to like build it and then test it. You want to do one thing, test it, see if it works, and then add make sure it's working and then go to the next thing so you know that it's working. Because if you just do add like 10 things, you're gonna have to spend all your time working out which is working and which isn't working, and it's almost impossible to know that unless you have all of the indicators on the chart and plotted and looking at it and all that stuff. So I mean, yeah, that's what I'm gonna do. But I mean, that's the plan. But I'll figure stuff out as I go along and all that kind of thing. And then if there's stuff that I don't know how to quantify, I'll ask questions like, "Hey, I want to do this. How can I do that? Or what should I do?" Or
Yeah, that's my question here, Akotic. Maybe in the when you say, let's say I want to see something that happened and it says 5 bars ago. Does that consider if it happened within the last 5 bars, like anywhere in place, or exactly 5 bars ago? Like,
Exactly.
huh?
Exactly.
Oh, it is exactly. Is there a function that says, if this happened within the last X amount of bars,
Yeah, it's called look back period.
look back period? Okay.
I don't use it very often. Um, I might need a quick refresher. But yes, just look back period is what you're looking for.
So,
so it's any time in the look back period versus
which,
exact
which,
hours
which
ago.
let's see here, strategy.
You'll notice when you put something, when you make the comparison crosses above or like an action like that, the look
Yeah.
back period will pop up.
Okay.
But
Oh, in the middle.
I just started the live stream. If you guys want to hop
Oh,
on,
yeah, yeah.
Okay, sounds
Uh,
good.
should we
Are we
bank? Oh,
doing the
we can
voice
skip.
on here?
either or works for me.
Yeah.
But I mean, yeah, if you want to talk with me, then yeah, I could stay on this one.
Probably just listen. I'll probably just shut up and
Probably
listen.
just listen.
I'll do that as well.
We can
Build.
You can ask questions on voice or in live chat, whichever one you want.
Okay, cool.
But y'all two probably already know this.
Yeah,
But
yeah.
gonna hop into live stream chat. And cool. We can start going over how we're gonna be comparing these patterns. So let me show you this little drawing real quick. It's a drawing I've done in the past. So our trigger for the template is the RSI crosses above the 50 line, which is what we have right here. And then above is price. So this is basically the perfect scenario. We get our trigger, price just keeps on going up until it hits our target. Or we'll just say we're using, a 10 bar exit. So after 10 bars, price is at its highest point, and we exit here, entered here. And we can even say the perfect scenario, there would have been no pullbacks, just flawless move. Then we exit. So that's the ideal scenario. Obviously, if you only took the RSI across, this wouldn't happen very often, but it would happen sometimes. And so what we're doing is we're looking at potential patterns that occur before our trigger takes place. and we're asking, let's say this brown line, right? And this, first of all these different patterns in this scenario, you know, you can see all delivered the perfect outcome. But what we're doing is we're quantifying what happened before the trigger and then measuring the performance after the trigger takes place. Okay? So if Jimmy quantified this yellow line here, and then you got, you know, Sam that quantified this purple line here, how do we compare these two patterns? They both have the same trigger, so nothing to look at over there. But how are we going to compare, you know, the yellow pattern against the purple pattern? This specific scenario was only one trade, right? Obviously, they both gave a perfect outcome on this trade. But how about the next 1,000 trades? You know, over the next 1,000 trades, will the brown do better? Will the yellow do better? And how are we going to measure and compare that? Okay. And the main way we're going to be comparing these is the MFE, the MAE, and together, well, I'm not going to do a greater than operator, but together we get the edge ratio. Let me just make y'all watch me draw that out, because why not? Sweet. So now we've you know, went over how different patterns can take place before the trigger. Okay. But now the question is, once we successfully quantified what happens before the trigger, how do we actually compare them? Okay. Let's just move on to this nice picture. So what is the MFE and the MAE? You can ignore the ETD. So as you can see here, MFE is represents the run-up. Some trades have no run-up, whereas others have a high run-up before pulling back, but the best strategies have a high run-up. So this might not be the best diagram because it's not showing you what the MFE is. I should have gotten a better picture for you guys. Give one second. Let me get you another picture. I mean, it's a good picture because it has the diagrams, but we need just a little bit better one before we look at that one. Aha. One second. And what software is that? That's a good looking software. Here we go. Now we can very easily see what's going on here. Okay. We buy here. MAE is the furthest point. Price went against us. MFE is the greatest point. Price went in our favor. Okay. And so what we're going to be looking at, a most common way to do this is to look at, let me go back over here. we'll say this is 1 and this is 20. So this picture doesn't go over edge ratio, but you divide the MFE by the MAE to get the edge ratio, okay? And so let's say the MFE is 500 and the MAE, let me do it over here. So MFE is 500 bucks, the MAE is 500 bucks, right? You divide those, you get 1, okay? Now what actually happened here? Let's say our exit for this strategy was 5 bars, right? Because that's what we're going to be using with the format. So this is with a 5 bar exit. MFE was 500, MAE was 500. Edge ratio is 1. If these were your numbers after 1,000 trades, then it'd be telling us that within the first 5 bars of opening this trade, price is just as likely to go in our favor as it is against us. Okay? That is what is telling us. Let me get this error code out of the way. Just type it out. It's important. So if 5 bar edge ratio equals 1, this means that price is, this is terrible. I'm trying to talk and type at the same time. This means that price is just as likely to move in your favor as it is against you. Okay, this means no edge, right? It's a coin flip. Anything could happen. That's why it's called the edge ratio. It's to really see, once you enter a trade, once we enter a trade, how likely is it that price, I wanted to make a PowerPoint. I didn't feel like making it, so I'm just doing this. How likely is it that price will move into your favor? Okay. And what we're doing here is we're comparing patterns, right? So if you change the pattern before a trigger, what do you want to see? Okay, you want to see that price is now more likely to move in your favor than it is against you. And we can look at this, we're going to look at this at 4 different bar increments. Okay, so the 5 bar edge, the 10 bar edge, 15 bar, and the 20 bar. So maybe the 5 bar edge is 1.5, okay? So what does this mean, right? It means within the first 5 bars, price is 50% more likely to move in your favor than against you, okay? And then we add pattern number 2, right? So the first one was pattern number 1. Johnny made this pattern. Johnny did a great job. 1.5 in the 5 bar. But now we got Sally coming in with some secret sauce. And her 5 bar edge is 2. Okay. So if you wait for Sally patterns to, if you wait for the Sally pattern to occur before taking the same trigger that we took on pattern 1, so both have the same trigger, right? RSI crosses above 50. But if you wait for the Sally pattern, then price is twice as likely to move in your favor. Okay? And it's important to note the bars. Okay? Price is twice as likely to move in your favor within first 5 bars, because this changes as the trade plays out. Okay? You lose edge over time. Your edge won't be just continually increasing, because after so many bars it becomes random chance. Okay, a pattern can only predict so much if it has any predictive power at all. Okay, so 10 bar edge might be down to 1.6 now, and the 15 bar edge is down to 1.3, and then the 20 bar edge is down to 1.2. Okay, but when within the first 5 bars though, price is much more likely to move in your favor versus against you, which means you could potentially have tighter stop losses or tailor your stop losses to that. So by comparing patterns this way, we are measuring the predictive power, we can say predictive capabilities of each pattern, right? Does this pattern actually increase the probability that price will move in our favor versus, let's say Y pattern. So we're answering, does X pattern actually increase the probability that price will move in our favor versus Y pattern? And of course, disclaimer, subject to in-sample data. So yeah, let me think. I think that really covers the bases here. By comparing patterns this way, we are measuring the predictive capabilities of each pattern. And we're asking ourselves the question, does X pattern actually increase the probability that price will move in our favor versus Y pattern? Let's pull this up real quick. I'm gonna have to make it smaller for this live stream. So this is our current little, you move that, should be a, oop, there you go. Cool. So Here we're comparing two patterns. All right, the trigger is RSI crosses 50. Here we're going to select our contributor. All right, so we got Akotic. Trigger. The trigger will always be the same on both because there's no sense in comparing different triggers. RSI crosses above 50. RSI crosses above 50. Akotic put his pattern in, so you can see the edge ratio fell off as the trade played out. So we had 5 bar, 10 bar, 15 bar, 20 bar. Expectancy rose up, which is expected. Obviously, you can expect to make more on your money the longer you hold a trade. So the main sauce here is the edge ratio. And then you can see Johnny came in with his superior pattern. Johnny got some sauce here. I could change it to Akotic if I just want to compare them, on the same side. But Johnny came in with the same trigger, but said, well, instead of waiting for this to happen, let's wait for this to happen, and then we'll look for the RSI cross. You can see his edge ratio actually grew, but then started falling off as we got towards 20 bars. Expectancy also went up as the trade played out. So looking to make about 2 times what you're risking, whereas here expected to make 4 times. So yeah, I think that really covers what MAEF, MFE is, what the edge ratio is, how it's valuable, and how we're going to go about comparing these patterns. So, moving on from that, we can try to quantify a pattern really quickly. We'll probably not do any better than the Johnny sauce. Let me pull up a chart. So once you get ready to try to quantify a pattern, see how it does against Johnny. Where do you start? I'm going to give the recommended method of what I think you should do. If you don't have any ideas, you don't have to do it this way. If you have just a head full of ideas, then you can do it that way. But right now we are on the we're gonna go to the 5 minute. Yeah, we'll go to the 5 minute chart. Let's just go to a random area on the chart. Here we go. Actually, no, I'll go back on the 1 minute. I really like the 1 minute chart. It gives us a lot more price action to work with. So in the 1 minute, and you can definitely even change the time frames up a lot. Notice to see what different stuff you'll see on different time frames. But let's just go to a random area. Cool. Zoom in a little bit. So we're going to take a vertical line and we're just going to start over here. I'm not going to mark every single one, I'll mark most of them. Let's see, okay, F7. So we're going to mark a lot of these triggers. That should be enough. Let me actually go more to what just happened? Let me go more to
Yeah. Yeah.
You answered it, and I got.
let me go ahead and mute Matthew. Has some background noise.
Yeah, Matthew.
I I put him on mute. Let me do more so the market hours, so we aren't just looking at completely dead price action. So we'll start like a little bit before. Okay, there we go. About 6 a.m.-ish. And we'll go ahead and mark a few more. Cool. So, next thing to look at is to know which trades did pretty much the best. I think it's pretty obvious. We have this one right here. Keep in mind, so our exits are 5, 10, 15, 20 bars. So we just want to see that price kind of moved in our general direction after the trade opened. So we have this one. This one's debatable. This one. And more so, I missed that really good one for some reason. Got that signal right there. So that's probably our best signal. This one's kind of decent as well. And so what we can do is just try to quantify, what is going on before these triggers actually take place. Let me do some highlighting. So we have this trigger. So yeah, this one. Then we have this one. I'm gonna let y'all look at the chart some. I'm gonna zoom in some. This is a really good one right here. Nice. Very nice notes. So yeah, so this is the hard part, This is where you gotta really think, really look at stuff, try and decipher what's going on. Kind of narrowed the focus down a little bit. Actually, this is a pretty good signal too. I didn't notice until I zoomed the hell in. That was pretty good. Price moved in our general direction. Alright, so we're not looking for stuff that happened at the same time as the trigger, because that's not a pattern. That's just, that would just be adding a condition on top of it. I want to actually look to see what's happening before the trigger. The price action here is very obvious, for one. Now we got this massive tank, just giant tank. And draw some lines to kind of take away some of the noise. All right, once you draw lines, it becomes a lot clearer, you know. It doesn't seem as crazy and erratic. I am also saying, you know, if you guys have any ideas, so whenever you wanna chime in. You can talk on the mic if you have any ideas.
Yeah, I think talking's a bit more clearer than just randomly spamming the chat with efficiency ratio yellow. But one of the things that I've noticed is one of the things I've noticed is the efficiency ratio oftentimes is, I don't know the technical word, but yellow before the RSI crosses. Like if you look from right to left, it's pretty much before that happens, sometime like within, I guess, like 20 bars or something, 10 bars, sometimes 5 bars, it's yellow before it crosses. I guess the only time that it didn't really technically is in between 12:30 and 12:45, but in between 11:15 and 11:30, and then
So you're saying
2 p.m.
so you're
to
saying it's
2:15
basically
p.m.
always yellow before it crosses, besides when we get the best signal we've gotten the entire time.
I don't know if it's always yellow, but it's something I'm just noticing looking at it. It's like every time before it's yellow.
Yeah. I
That
think
might be worth looking at something maybe with that.
one thing that's pretty cool is once we went heavily, you know, very efficient on the downside over here, and then waited until we became very efficient on the green side.
Mm-hmm.
Seems to kind of eliminate most of these triggers in between here.
The force index is also blue.
Yeah.
On the 2 right ones, but on the left one it's just a spike, but that one looked like it didn't really work out. Like it on the right it's like a extended above 0 for some time, and on the left it's just a little spike. but I don't know if that counts because it's not happening. It's just kind of happening at the time of the trigger, which you said is just a condition. It's not a pattern before. So I don't know if that counts. But I'm gonna go with the efficiency ratio yellow. Price goes up real good.
So you're saying that wait for it to go yellow.
I think it being yellow for a certain amount of time is probably one thing to look at. I don't think it's the only thing you can go off, but saying like if you can set like a boolean, like if it stayed yellow for this amount of time, um, then that's one thing that allows it. But then if you're just having that by itself, it's just like a market state. It's not really a pattern. So there is other stuff to look at. One thing that is happening with the two on the right compared to the one on the left is there's upwards movement like consistently before the trigger, even if it's like 5 bars or whatever. I can't really see. I'm on split screen on an iPad trying to take notes at the same time. I can't really see perfectly. Um, but there is upward movement before the RSI cross on the two on the right around like 12:30 and 2 p.m. I mean, the one on the left at 11:30, 11:15 or whatever is just kind
Yeah.
of a range.
And so
Meaning like there's no upward movement before it. It's just ranging.
the
Oh,
thing,
another thing as well is there's no highs like close to there's no like there's no highs. That might be something is saying there's no highs in between like a certain amount before the trigger. Because on the left there is two highs before the trigger. And then on the two on the right there isn't. Like it's just down it's just like a downtrend before that. And then upwards movement.
so the
So
cool
sorry, there's,
thing,
there's a lot of things, but
the cool thing about you saying that there's some upward movement before the trigger. The upward movement, since we're on a time-based chart, is like reliant on time. It has to have so many bars in order to go up. And our condition is crossover 50. So we could say that the RSI, because the RSI has to travel, anytime price is moving like this, the RSI is also traveling up in a very linear fashion. But to get the amount of bars that we want, the RSI is going to have to be coming from somewhere, coming from an extreme, basically. So you can see here, the RSI basically came from the 30 line and moved in a very linear fashion to the 50. Versus at other times, since it wasn't able to travel that far in all these little false crosses. Right? Does that make sense?
yeah, it's a really good observation actually. I
So
was just looking at the right direction,
so it's like here,
but it makes sense.
and when it's just kind of textbook shit, really. If RSI goes below a certain level, then look for the cross above. But that's a good premise as to why, though, and you can classify how smooth that movement up to the 50 line needs to be, because you can see how smooth this 50 line was, right? It's very smooth, and also it's reliant on the period, but even still, this was a much more choppy move up. But both of these move ups were obviously after a move down, right? So I think what we could do here to try to quantify that smooth move up is add, one second, I'm going to add a moving average. I'm going to set the input as the RSI, and I think we're using the average, pretty sure. Go ahead and plop down a chart real quick. So I want it to be a little more extreme. Let's do like the 9 maybe. Looks like even that move might be a little too smooth. It's funny because this is the same concept you do, but with an RSI and a moving average. I'm using the average of the RSI. But nonetheless, we'll roll with the 9 because that one wasn't that bad either. But we could say that once the RSI crosses above the oversold level, we look for a long when the RSI crosses above the 50 level, as long as the average, or as long as the RSI doesn't cross below the EMA moving average, which here it crossed below, it would invalidate that signal, and then we wouldn't get another signal until right here, because we crossed below, then we crossed above the EMA, and we just glided up without ever crossing below that EMA.
Here's another stupid simple thing that I've just noticed. When it the times that it seems to, I guess, work out, with like the two on the right is price, the RSI has gone from 50 down below 30 and then back across 50. Whereas it's not just like, because you could say like goes below 30, that's one thing. But if it's been at 30, like on the left, if it's been at 30 and then just sort of drifts up, I don't know if that's something that is worth looking at, or
I actually don't know what you're saying yet.
yeah, now I realized I don't know either, so it's all good. Don't worry about it. Forget it.
All right. So let me do you fully understand what I'm doing with this EMA here? Did you get it? Gold? Hello?
Hey, can you hear me?
Yeah, I can hear you now.
Yeah, sorry. It's like the internet's really bad. I'm on 144p resolution, like 2 megabits per second, basically on a dongle because we don't have internet. But I
Yeah,
think there's
sucks.
a yellow moving average on the RSI.
Let me
Yep.
let me
If you just blow it up a bit, it'd be great.
oh yeah, let me change the color of it. Let me go to Magneto. Can you see it now?
Yeah, that's way clearer.
Okay,
Yeah,
cool.
cool. Okay, that's way better. Thank you.
So what I was saying about that smooth move from below the 30 up to the 50, we put an EMA on you put an EMA on the RSI, and we could say that once the RSI crosses above 30, we'll take the cross above 50 as long as it doesn't cross below the EMA. So here it crosses beneath the EMA, we wouldn't take it. Wait for it to go below 30 again, which it looked like it did there. I can't really tell. But regardless, make sure this is the default RSI too. Yeah, 14.3, and we're using the average. Cool. Where it looked like it was, looks like it touched it. But nonetheless, price or the RSI goes above the EMA, and it gives a very smooth move to the to above 50 without crossing beneath the EMA. So it basically just quantifies that the RSI has to move very smoothly from the 30 up to over the 50. And it doesn't really happen that often. What we can do real quick is look at what triggers would have happened with that rule in place. So this was our best signal that I stated before. And let's just look. See what happens here. Okay, so we'll keep that one. Let's go and delete the ones that we no longer have. So we keep that one. This one looks like it might. I'm gonna say it doesn't. Keep that one. Keep that one. Not erasing these, forgot to erase them. But yeah, I mean, there you pretty much go. I didn't do all of those. I started right there. So you can see the ones that we have. We've kept our best one. That one's a winner. That one's a winner depending on how many bars you hold it for. That one's probably a loss, maybe not in the 5 bar. But there you go. So it seems like a pretty decent pattern that's worth testing. What do y'all think?
Send it.
Potential sauce against Johnny. I probably won't win.
See, Johnny's got that secret sauce.
Let's see. So let us go to here. I'll name it P3. Actually, what I'm doing, I gotta do the template. Where's template at? I don't think I downloaded a template because I did it from my laptop. Let me download a template right quick.
Hey, how do you do that on Windows if you've got a desktop and a laptop? Like, is it like a cloud thing, or just are you going to do it with a USB stick, or how does it work?
I'm going to have to download the template, install it.
Yeah, like, do you just email it to yourself and then download it, or
No,
how does it work?
you just click it literally, and it'll open up a browser and it'll download it automatically.
Okay. But if you've got like NinjaTrader on two different machines, like, can you get them to sync up, or
No,
that doesn't work, or
nope.
you have to like manually send the system through something like email or
Yeah,
whatever?
they're not. The platforms aren't in sync.
Okay.
So we got the Akotic pattern template. Let's go to the conditions. Let us go to set 3. What in the world? This is not it. My bad. This is the wrong template. That was the other template. I was tripping. Okay, market patterns template. Here we are on set 3. So we got the RSI and copy and paste. The RSI crosses above 30. And for it to even be valid, the RSI average must be greater than the EMA, but not just any EMA. You gotta go to the input on the EMA, scroll down, choose the RSI, average. So the average of the RSI is the input for the EMA. And that's going to be something we optimize. Period there. But for right now, the RSI average is greater than the EMA of the RSI average. That sets our pre-long to true. Now we can duplicate this. So obviously it's already going to be set back to false if we go long. But another condition is that if the average of the RSI, why is it showing that? Okay, then we have to cross above 30. Okay, so in this one we gotta eliminate that one. So if the RSI average crosses below the EMA, sets it back to false. Cool. Now let us set our EMA. Default is 14. I said you can optimize one parameter as long as the iterations are under 10. So let us choose EM1 for the period and the RSI. Should be good to go. Yeah, I don't see why not. Let me save this first as something else. Save as P3.
A question on this: when you do save it like that, if you load it up, change something, and then save it, it keeps the original. It doesn't like it's not like you have to save it before you touch anything as a new thing, and then it works on the new thing, or if you open up the template, mess around with it, and then hit save as something else, that saves it as something else, but it doesn't affect, you're not saving that template as something else. Or it doesn't, do the
Correct.
changes
It doesn't
stick
save it.
on
It doesn't
the
save it
old
until
one?
it doesn't save it until it compiles.
Okay. It's the
So
compiling of it that does
yeah.
it.
So since
Okay, so
I saved it as something else first and then it compiled it, the original is still untapped.
okay. Okay, cool. Okay, I was wondering about that.
Yeah.
Cool.
So let us go to the analyzer and pull it up and set us up here. So we got P3, we got the index basket, we got the 5-minute chart, we got the year of 2022, we got the commissions, we need to go to optimization. I'm going to start out on the 5 bar. We're going to do 2 to 20 increments of 2. Aggregates, max net profits. We should be good to go. Is there any sauce to be had with this pattern? Let's find out. Starting off here on the 5 bar. Let's see. So I can already tell you from the profit factor, it's not going to be good enough. So let's get a calculator out real quick. So here, MFE, MAE, you can see they're almost the same. 472 divided by 449. 1.05. So basically, 0 edge. Let's go to 10 bar. Probably won't be any different. Well, slightly higher profit factor. We're at 622 divided by 588. Oh, nope. 1.05. At that point, you gotta give the pattern the boot. What we could though do is look for this pattern on other time frames. So what I'm gonna do is I want to add the, where are we at here? Additional data. Use primary instrument. Let's add the 10 minutes. Let's add the 15. Let's add 30. So what I want to know is if this pattern occurs on a higher time frame, you know, it's basically 10-minute average RSI crosses above 30. course, you gotta change the inputs of these. And everything should be right. A lot of buttons to click, a lot of things you could easily miss. So definitely take your time. And let's go back to the 5-bar. So basically what's happening here is we're saying that if the 10-minute RSI crosses above the 30, then we're going to look for a long on the 5-minute as long as that RSI doesn't cross beneath its average. The average of averages. It's kind of weird. But we're going to find out if this improves the likelihood that price will go in our favor. And we got worse results. Man, it shows 2. Fair enough. Let's go to the 15-minute. Exits. Way better results on using the 15-minute bar. Oh, edge ratio not that high. Let's see what the ratio is. It's definitely better, but I was hoping to be a little higher. Oh, we got 1.21. So we are, like I said, we can optimize one parameter. However, we're not doing it how we used to do it, where we were able to have a different parameter in each selection, basically. So we're gonna roll with 6. If I don't feel like going into the backtest tab, so I'll just say like 6 to 8, and hopefully it'll choose 6. But now let's move on to the 10-bar and see what happens.
So the bar sense, and I haven't had a look at it yet, but the bar sense entry isn't for optimizing, it's just to set the bars that we're looking at for the edge ratio.
Correct.
Okay, cool.
So here is a 10-bar. Let's check out the edge ratio here. It looks like we got a much better edge ratio, maybe, perhaps. I'm gonna find out. So, I can't do math all of a sudden. 749 divided by 563. Oh, 133. And it's still at 6. Still at 6. And that's normally going to be the case, because 5-bar is normally going to give you the best one. So on to the 15. Looks like this pattern might make the sheet unless it hits the fan. Oh no, I done jinxed it. Let's see, 872 divided by 712. Look at that. It still made it on the 15. But I ain't feeling too good about this 20. Please pass. Oh my gosh, shit hit the fan. You see how profitability doesn't matter that much. Either way, we have to be profitable in all 4 time frames. I say time frames, but you know what I mean. All 4 bar exits, and shit just hit the fan on the 20, so. What a shame, but luckily we have one more time frame to test. I really feel like I jinxed it. I just straight up jinxed the hell out of that shit. We are going to see if the 30-minute can save the day, or if we have to throw this pattern into the bin. I think that's what the UK people call it, right? The bin?
Yeah, in the bin.
In the bin. 100%,
Or rubbish.
100% never say that here in America, but I think
Is it trash or no trash?
yeah, we just say trash.
Yeah.
Put it in the bin. Alright. Let's see if 30 minutes is just gonna give us amazing results. Where are we at? I'm bummed out. I thought we was about to have a potential pattern. It's the first time I've seen it do really well on like the 5 and the 10 and just completely fall off the track that hard. It really fell off. So we have 5 to 20. Looks like everything is correct. Ooh, that is nice. Got a P&L to draw down of over 10. That is a very saucy edge ratio. Well, damn it, it's not that saucy. I thought it was. 1.36, pretty good. And the parameter it chose was 4. So we need it to be 4 the rest of the way through. Hop on down to 10. Rooting for it. 25 on 4K.
Sorry, it's hard to follow sometimes. What did we change on? Did we just change the EMA size?
No, we changed which time frame you look for it on. So now it's
Okay.
the 30-minute time frame. So on the 30-minute time frame, wait for the RSI to cross above 30, and then if it crosses beneath the EMA, then it changes it back to false. If not, we take our trigger.
So the trigger is still on the
5 minute. Yes, 5 minutes.
Sure. But the EMA is on the 30-minute. Was it the 30-minute you said?
Yeah, it uses the 30-minute RSI.
Okay.
So we're looking.
That's what you're talking about with Veritas before.
Yeah, we're looking at the 30-minute
Yeah.
chart. You know, and seeing that the RSI crosses above 30, and we say, okay, we're going to take this crossover on the 5 minute now, as long as the RSI doesn't cross beneath the EMA. Let's see what this edge ratio is. On the 5 bar, we were at 1.31. Here on the 10 bar, actually went up a little bit. Look at how consistent we are on these products too. That's just real nice consistency. The 4 period EMA also got selected. So last time shit hit the fan, going on up, but maybe it won't this time. Ugh. I don't like how the drawdown is like progressively going up $2,000 every time. But it looks like our edge is still intact. 841 divided by 660. It did drop, but we're still above 1.2. I feel like it is going to just completely shit on itself as soon as we go to the 20. Oh damn, I think it chose 2 as well. I'm not sure. I have to go back. Okay, well we are profitable. So we passed that part. But is the edge ratio above 1.2?
It is legit $2,000 every time on that drawdown going up.
Yeah, it's hilarious.
So are you running the optimization every time on the EMA? Like every test here, like it's changing from 4 to 2. Like you're still running that throughout the tests. That's okay.
No, so I think you missed that part. So we got the EMA.
Yeah, I all fucked up.
We got the EMA from the 5 bar, and then we're using that same EMA for the other tests. It's just I didn't feel like switching back to the back
Okay.
test tab.
Okay, sorry. Okay, I understand.
But I am curious now. I have an idea. Let me first run this optimization on the 20 bar and see what it gives us. So it shows the 10 on the 20 bar. Freaking edge ratio still under 1.2. It don't even matter. Doesn't even matter. It's just not good enough. Yeah, I don't think going above the 30-minute is worth it. Dude, holy shit. I forgot a huge part that's gonna totally make it better. The freaking trading hours. No wonder it's trash. We're supposed to be trading only during the US index RTH. That's not the first time that's happened either. Good grief. Okay. Now we're rolling. Now I want to go back to the 15-minute. Good grief. Oh well, let's just hang out on the 5, I guess. No, due to trade count, I want to bring it back down to the. We'll just see. We'll see how the 30-minute does. But all right, let's go back to the 5 bar, 220. We got our trading hours set. And let's run it. All hope is not lost for this pattern.
I just want to take down Johnny.
Let's look back at what Johnny's packing again. So Johnny got to 1.3, 1.5, 1.5, and 1.5. Johnny's doing pretty good. So not many trades here because it did, dramatically reduce when we trade, but the edge ratio is looking real nice. So 815 divided by 573, and we're at 1.42. Very nice. So let's do 2 to 4. Up to the 10 bar. And this is why I wanted to use a lower time frame. Beautiful numbers once again. I mean, just bravo here. 995 divided by 685. We're at 1.45, so I went from 1.41 to 1.45. Parameter is still 2, so it's still where it needs to be. Just want that parameter to stay as 2. Results aren't as consistent here, but overall still doing very nicely. Yeah, 1206 divided by 851. We're still above 1.4. And now the dreaded 20 bar. Man, 20 bar is tough on this one. Where are we going to be at though? 1240 divided by 970. We passed. But I want to look at the other time frames right quick. So let us look at the 10-minute.
Hey, real quick, because I missed it before. How did
me-
you get those primaries up? Or
Give me one
I'll give you a
second.
sec.
Give me 1 second.
There you go.
I got some background noise coming in. Alright, I'm back. Let's go ahead. Oh, the primary. I'll show you. Gold. How to do it. Are you watching?
Yeah.
So in the builder, you go to additional data, go to add, checkmark primary instrument, type in the instrument or type in the increment, hit OK.
Okay, additional data, add, and then the market you want, or whatever, the time frame you want.
Yep.
Okay, I'll rewatch it anyway. Uh, how long has the stream been going for in minutes for like a time thing, bookmark type thing?
Let me see.
Does it say like
Let me see. Let me see. Let me see. 80 minutes.
80 minutes? Okay, thanks.
Yep. Let
I'll
us
rewatch it later.
compile this. Let's see how we do on a 10-minute. How are we gonna do with the 10-minute chart? We gotta beat like 1.41. So we definitely don't. So let's hop to 15.
How does it work in the Excel thing, by the way? Is it rounded up? Like, because here we're getting like 1.419, and then Johnny's just at 1.5 or whatever, or 1.2. But is it rounded up or down, or
I just took the
it's just an
second.
example, or
I took the second decimal place off,
okay.
which I might add it back, but for some reason it was wanting to put the second decimal below the number, and it was looking weird.
So if it is like 1.29, it's really closer to 3 than 1.2, right? Or
Yeah.
but it's gonna just still say 1.2, even if it's like 1.299.
Yeah, but I might just go ahead and add the other decimal back.
Yeah, okay.
Press did it for
I'm
right
just
now.
wondering about how it works.
Yeah, I'll probably add the second decimal back. 15, 15, 15, 15. Okay, let's see how the 15-minute does. Well, it beats 1.4. That's pretty good. No, that's probably not good enough. Probably not good enough. Nope. I'm curious what it'll give on the 20 bar though. Let's just see what it gives on a 20 bar. It chose 4 on the 20 bar. I'm just curious if these numbers would hold up on some out of sample data. So let's just put it on 2 more years. Just out of curiosity. It shows the 4. Because basically we got an age ratio of 1.29 on 1 year data. Let's just give it 2 more years. I'm just curious. I think it shows 4 as a parameter. Either way, I'm sure it'll choose like 2, 4, or 6. So we'll do this test just out of curiosity, then we'll go ahead and call it there. I might add this pattern to the sheet. I mean, it passes all the requirements. So I might add it. But now y'all know why we're testing the way that we're testing. Yeah, so it's just not even profitable on the out of sample data. And you can see the edge ratio is under 1. So that might be why we're going to add sample size to our requirement. I'm thinking 2,000 trades.
What was it before? Sorry. When we were testing the in sample stuff. What were we getting around about trade mark?
The edge ratio was 1.29.
No, but like how many trades like where we were roughly or we were just not paying attention or
It was like 140 maybe, 140 trades.
oh, okay. There's not a lot.
No, it's because they're using a higher time frame
Yeah.
filter. So,
Okay. Okay.
but with this test, it gave us 477. So yeah, I'm still thinking about how we're going to do a trade requirement. Because see, this initial one I posted is 2,448. That's a lot more. I have a lot more faith in that than Johnny's lower sample size. Let's test out the 5 bar, see if the 5 bar is better. Then we'll go back to the 30-minute and see how the 30-minute does in out of sample. So we're actually profitable on 5 bar. But edge ratio is basically at 1. Let's change it back to 30 minutes. And let's see how the 30-minute does out of sample. It definitely does better, but it also has less trades. And it chose the 20 period EMA. It is over 1.2 though on the out of sample. Let's give it even more data. Damn 30-minute chart. Let's give it like since 2015. Let's see what it's got. See if we can get like 1,000 trades on it. Then we'll call it. Let's make it lose, end on something bad. Then let's call it. I'm just always a pessimist whenever I see good performance. No. So give it some more data and it'll fall apart. And then if it doesn't, I start scratching my head. It should definitely fail. This much data. In my opinion. If it ever runs through it, that's quite a bit of data. Well, it's profitable. Such a lack of freaking trades, though. Good grief, man. Let's look at the chart some. Curious. Let us look at the charts. Show me some trades. There's a trade, there's a trade. You can see this like hardly ever happens. Very specific.
This is the RSI. Sorry, the moving average on the 30-minute or.
Yep. 30
Okay.
minute. Alrighty then. That is that. Cool stuff. So now you know what to do. And then after we get settled in, maybe after a week or two, I'll make another video specifically on how to export results and get them uploaded into the Excel, but for now I'll just be adding them manually, or adding them myself basically. And we'll continue to look at, quantifying some more patterns for the future. I will probably be focusing next on the sample size issue. Decide how I want to go about that. But cool. Thanks for joining, and I'll talk to you guys soon.